Hey everybody, Jennie Hendricks here with Century 21 Prestige Realty. Listen, I just real quick wanted to jump on today and get you some information that I came across yesterday in an article from one of the real estate subscriptions that I have. And it talks about the CARES Act, which is the federal legislation having to do with the coronavirus financial impact and relief. Just a little bit of history. At the height of the Great Recession, so this would have been in like 2010, there were 2.8 million properties that filed for foreclosure. And so a key provision of this latest, they're calling it a stimulus, this latest legislation is aimed at avoiding the havoc that wreaked on our economy. So a lot of the direct assistance we've heard about, the $1,200 that's going to many Americans, small business loans, expanded unemployment insurance. A lot of people, it's been a lot of talk about that in the news and on social media and so forth. I haven't seen a lot that has to do with mortgages. So I wanted to just real quick get you an update. So during the designated disaster period, which began on March 13th, a borrower with a federally backed loan can request forbearance through the loan servicer. So a federally backed loan means that it's either guaranteed or insured by Federal Housing Administration, FHA, a Department of Veterans. So if you've got a VA loan, you would qualify. Department of Agriculture. So if you've got a USDA loan, which is really a popular loan product in this area, then you would qualify for that too. Or something purchased or securitized by Fannie Mae or Freddie Mac. So that's going to be really most of the loans in our area are going to be able to take advantage of the provisions in this legislation. Okay, so sorry, I think we lost you there for just a minute. But anyway, so the most important thing right now is to reach out and talk with your lender, okay? Because all of this is going to be really lender specific, and you just, the most important thing is to always call your lender, explain your situation, and see what programs they have that you can take advantage of. Okay, so once the request for forbearance is submitted, it's granted for a period of up to 180 days at the request of the borrower. No fees, penalties, or interest beyond the amount scheduled can be accrued on the borrower's account. And this is interesting, and this is different from the last time that we were kind of dealing with a similar situation. The servicer cannot request any additional proof beyond the borrower's just statement that they're having a financial hardship. So, 10 years ago, it was really quite a process to prove your hardship. But now they're just saying that you just have to attest that you are having a financial hardship. And this is interesting for my investor clients. During the covered period, all of the protections extend to homeowners are being extended to owners of multifamily properties with federally backed loans as well. Now, not as many investors have those federally backed loans, so there might be a smaller number of those. But anyway, the last thing that I wanted to let you know about is that there are credit protections that are built into this legislation as well. So the stimulus package amends the Fair Credit and Reporting Act to allow more leeway for consumers that come to agreements with lenders on deferring, making partial payments, modifying a loan, forbearing delinquent accounts, and utilizing any other relief. Basically, it's a measure it's designed to not allow the tanking of your credit score for the people that suddenly find themselves out of work, due to no fault of their own, just due to this coronavirus. So if a lender and a consumer impacted by the coronavirus come to an agreement on any of the stuff that I just told you about, basically the forbearances and so forth, and the consumer makes either the agreed upon payment or is not required to make a payment, the account must be reported to credit agencies as current. So that's really a big deal in this legislation. Is if for some reason you have to make a deal with your lender and you were current before and you maintain the provisions of the agreement that you have made with your lender, your credit is going to be reported still as current. So if you find yourself in a situation where it looks like you're going to be in trouble, please reach out to your lender. Don't wait and for those letters to start coming. It's really scary sometimes, but there's provisions in this CARES Act that can help you with that. So if you have any other questions that I can help you with, please reach out. Happy to connect you with